That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The Radio Medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trust can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you on the final day of the week, the final trading day of August. And this morning at 8:30 a.m. Eastern Time, we got the Personal Consumption Expenditures Report, which includes PCE inflation data in the form of the PCE Price Index. The headline index came in at 0.2% for the month, 2.6% for the year, right on the screws, right where we were expecting to see it, or at least right where the market was expecting to see it. I didn't personally have any expectations. And core PCE came in at 0.3% on the high end of the range of expectations, but still within it. And so that moved the annual index from 2.8 to 2.9%. And so, Mike, no real surprises in the economic data here. But we do have the long end of the yield curve moving up very modestly, a couple basis points in response. We got stocks selling off a little bit. I don't know if it's with regards to this or just, hey, markets have had a nice little run and it's end of month rebalancing. You never know with these things. I don't like to ascribe too much to it.
Especially because there's nobody. Not nobody, but it's a light trading day on the Friday before Labor Day, I think.
The population of New York has relocated from Manhattan to the Hamptons.
Correct. Yeah.
In the last 24 hours.
Yeah.
And so the Friday before Labor Day is generally kind of a bad time to try to get a read on what the market is going to do in September. It's not to say that today doesn't matter, but just that it doesn't matter.
Okay.
In any case,
this reading on PCE was pretty mirror image matched to what we got from CPI. We are seeing now, core inflation, which excludes those food and energy readings, around 3%, and regular old inflation in the high 2s. So not terribly surprising here, and I don't think any sort of I can't look at this today and say, oh, but we're heading for a trend of acceleration. We might get that from tariffs, but I don't know that any of this data, to me, indicates that we are heading for above 3%, for example.
Well, I think here's where I look at this. So if we look at, core PCE, because ultimately that's the one that matters from that the Fed really watches. Because this is why this matters. It's what is the Fed going to do? Ultimately, we've talked about this before. Inflation, the only reason that people don't like it is because they don't like it. I'm not saying that anyone should, but I'm just saying there's nothing that inherently states higher inflation leads to lower stock prices or this and that. It's more just, hey, when inflation gets high, the cure that we have for it based on, what we know to this point and what we've done is raising interest rates, which all else being equal slows the economy, makes the cost of capital for companies more expensive, and stocks tend to respond negatively. Mm-hmm. So that's why we care about core PCE, is simply because the Fed does, and so we have to. So here's the big thing over the rest of the year, really. So we're going to get 5 more inflation readings for 2025. I know only 4 this year, but just when we look at, the calendar year for, the actual readings. August of last year came in at 0.2. September and October came in at 0.3. November 0.1. December 0.2. So where this matters in terms of where core PCE is at the end of the year, hey, those 0.3% readings are a bit of a slog to get over, right? I'm not saying it's impossible, but are you going to print 0.4 on core PCE consistently? I just don't know. We haven't seen, many of those. The only reading over 0.3 since early 24 came in February of this year. And that was a 0.5% reading that we got, and there's been nothing around it that's anywhere close to that. So you look at this and you say, okay, by the end of, the 2025 PCE data, reasonably, you've got, maybe 20 to 30 bips that you could see this move up if things continue in this fashion. And so, okay, is a reasonable expectation, hey, core PCE, when we get this one in January for 25, comes in anywhere from 3 to 3.3. I think that seems reasonable as a possibility. Is there the possibility that we print, a bunch of 0.2s going into year end and as such end up with, core PCE at 2.7, 2.8? Maybe. I don't know that it's quite as convincing there, given the tariff situation, to suddenly see inflation trend lower, but it's possible. So I think 2.7 to 3.3 is your realistic range, and probably 3.1 to 3 to 3.1 if you really want to hone in on central tendency. It's basically saying, look, core inflation's probably right around 3%. And that's not terrible, to be fair. But here's the thing. When you have inflation running at 3%, prices double every 23 to 25 years, as opposed to 2%, you're talking every 35 to 37 years. So it does have an impact over time. It's a meaningful shift moving from a 2% inflationary world to a 3% one, and it's more noticeable as well, which is why generally you try to see central banks keeping inflation, closer to 2%. You can have good economic environments where inflation runs closer to 3. The 1990s were a case in point there. I don't think anyone would compare, the economy of today with the, blockbuster that we saw in the 90s, except for, maybe some tech bubble similarities. So I think ultimately where I come back to on this is, hey, the Fed may end up saying, hey, we're cool with inflation running closer to 3. That's okay. It's not necessarily the worst thing in the world, but how does that impact other things as far as, commodity pricing and things like that? And does that push inflation higher with a higher risk of 3% turning into 4% inflation? Yeah, those are things that you have to be aware of in that world. And this is, potentially a sea change that we could see in terms of how we look at, or how the Fed looks at inflation here.
Right. So, yeah, and it does kind of tail into, they're cutting in September, and we've got a piece later on about, okay, is now really the time to be stimulating? But clearly they're on this course now, and I think the only real thing that pushes them away from it would be labor market-induced inflation, which we will see whether or not that comes in.
Yeah, look, we've got some key data points before the next Fed meeting. You've got PCE's out of the way now. There's no big surprise here. So this, I don't think, really changes things very much. And by the way, you see this in the market pricing for the upcoming September meeting. Yesterday, there was an 86.7% chance the Fed was going to cut at the September meeting, according to the CME Fed Funds Futures tool. Right now, it's 89.2. So a modest shift towards, okay, some of the potential for, a hot PCE is off the table. so it's a little bit more likely, but no major shift. The only other major data points that are left now, jobs next Friday, and then you get CPI about a week and a half after that. That's it. The other stuff, quite honestly, jobless claims, you're only going to have 2 more now before the Fed meeting. I don't know that a trend of 2 bad or good jobless claims numbers is enough to shift things.
Mm-hmm.
So it's jobs next Friday and then CPI later in September. Those are the 2 data points that matter. And I have no idea what we're going to get from jobs. I mean, Mike, when we look at the jobs numbers next Friday, the projections right now are for about 70,000 jobs added. Unemployment stays steady at 4.2. Labor force participation rate continues to decline. Average hourly earnings stays at 3.9. If you get that, I think you're right on track for, obviously a 25 basis point cut from the Fed.
Yep.
But I'll acknowledge, look, I think there's a possibility that the numbers are worse next month. I think there's, even a possibility that you get big upward revisions and maybe we're like, oh, hey, like new data came in and things look better. I have no idea because we're at an inflection point and you don't know how the data is going to evolve when you're at these critical points. So I think there's, look, quite honestly, I think there's a chance that you could end up with a 50 basis point cut if you get a bad jobs report. There's a chance that if it comes in, screaming hot, Fed doesn't cut at all. I think those are both possibilities when we look at the September meeting.
Yeah.
Anything else on PCE that you want to touch on?
I don't think so. Like you said, it was a pretty in-line report for those of you that are just catching what the market's doing, which is selling off a fair bit. Probably not because of this.
No, because bonds aren't really moving that much. Right. The 10-year's up 1.6 basis points. Here's my general thought on end of month. It means nothing. End of month, you get all kinds of rebalancing flows from, different either pension funds or mutual funds that are trying to rebalance to their target allocations. You get all kinds of, corporate flows that happen and things like that. I don't think you really should read anything into end of month. It's not to say that, hey, this couldn't continue later today or, into next week. But whenever you talk about like the last 2 to 3 trading days of a month, I generally consider them noise just because there's so many forced flows that happen then that I don't know that you can get any accurate read on what's going on in the market.
Yep.
Let's take a quick break here. When we return, Mike, should we talk about what rate cuts could mean if they end up happening in September? Do you think we've covered that enough?
No, let's talk a little bit about if the Fed is to embark on a rate-lowering stance, what does that mean for all sorts of folks? I think that's important. Quick break. Right. We'll cover that next on the Financial Exchange.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Artificial intelligence is changing the way companies invest and how markets move. Add to that global trends like international outperformance, a weakening dollar, and shifting bond yields, and you've got a complex landscape for investors. This is Mike Armstrong from the Armstrong Advisory Group, and we're hosting 2 financial seminars this fall to help you understand what it all means. Join us at Margaritaville Resort, Cape Cod on October 9th, or at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your seat. We'll talk about how diversification and preparation may help you navigate uncertainty so your plan is ready. Don't miss this chance to get a clearer picture of your financial future. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Mike, we got a piece in Market Watch. Titles, yes, rate cuts will be good for stocks, but the Fed would be stimulating an economy that doesn't need it. Discuss.
Maybe not. It's a bold opinion.
Definitive case, yeah.
From Jamie. I'm not sure that it is all that clear that the economy doesn't need it. We have seen some pretty weak hiring data, and if it were to continue, then we could see companies downsizing. We could see real problems for consumers. So I'm not quite as convinced as Jamie seems to be that the economy doesn't need it. I think it's fair to say it doesn't now, but that's not how the Fed acts. They act to try and prevent recession, not just respond to an existing one. The bigger practical question in terms of what happens when the Fed cuts rates, I think is worth, refreshing our memories on, right? I mean, for those of us with savings accounts at the banks or money markets or, any of those things tied to really short-term interest rates, you will start to see those rates come down. And that's part of what I think Jamie talks to that, it fuels market speculation in some ways, or market rallies in some ways, is cash that is getting paid less on oftentimes moves into other types of investments. The other piece it does, though, is it affects people's determination of what a stock is worth, right? If your alternative to taking risk in the market is a lower interest rate, then that discount rate you use to apply to things like their future earnings changes as well. Now, we're talking about, in all likelihood, a 0.25% cut here at the Fed's meeting, and so what we shouldn't expect is any sort of necessarily move to the longer end of the curve. And Chuck, you probably remember the stats better than I do, but when the Fed is cutting at a time when we are not currently in a recession, which it appears we are not, it's kind kind of a toss-up as to whether or not long-term rates move down or up, if I'm not mistaken. It's a coin toss as to what happens with things like mortgage rates and auto loan rates. They sometimes go up, they sometimes go down. It is not one for one.
It is, and I think again, when we're talking about rates, there are a few different things that you need to think about on this. Let's first talk on the equity side. The easy comparison that I'll make is, Mike, if you could go out right now and get 15% on a 10-year treasury, which you can't.
Right.
How much would your return have to be in order to take equity risk? You're not going to go out and be like, yeah, equities have historically returned, 8 to 10%. Let me go out and buy equities when I've got a guaranteed 15 from the U.S. government there.
Probably not.
Right? And this is why when rates go up, multiples come down, is because equity investors say, no, I can go and get a better return somewhere else with less risk. The other piece is when it comes to bonds. Think about what you're comparing things to there. If inflation is running at 1% and it's pretty stable, you might go out and say, you know what? I'll take 2% on a 10-year treasury because I still want something safe. It's better than inflation. Fine. And by the way, that's what a lot of people did in the mid-2010s.
Yep.
Inflation was really low during the first half of that decade, and growth was slow, and investors said, you know what? I'm just going to get my 2% and call it a day, because also, look, the Fed was acting in a certain way that suggested rates were going to remain low, and so there was minimal risk there, which was true at the time. Like, rates basically stayed low for the entire 2010s. On the other hand, let's say you're entering a 4% inflation period. You might say, and again, no one knows what inflation's going to be, but let's say inflation's running at 4%. You say, okay, the Fed's paying me 4% right now. That's not enough. I need a little premium because 4% inflation today means it could be a little higher tomorrow. It might be lower, but I'm concerned that it might be higher. I need more on that side. And so you might say, no, I'm not going to buy a 10-year treasury until the yield's 5.5. And where this all kind of meets together is these decisions that businesses have to make all day, every day. Insurance companies is an example. The things that they hedge for are, some of them are short-term in nature. When you pay an auto insurance premium into an insurer, generally they assume, okay, X percentage of those are going to be used in the next year. When you are going out and buying a life insurance policy, they have the actuarial tables and they say, okay, there's a 3% chance that you're going to die over that 20-year period, and we're going to hedge that with, bonds of X, Y, and Z duration. But all this comes together, and eventually you get to a point where insurance companies are, they don't necessarily segregate these buckets out. They kind of buy, mass exposures. And so part of it might be, okay, if we have, these potential things that we need to cover and inflation is moving up, hey, are we comfortable buying a 10-year treasury at 3.5% if inflation's at 3%? It's a lot of risk for us depending on how these costs might move.
Right.
And so this is kind of where the rubber meets the road on this, is all these different decisions being made, and that's how your market actually happens in these different areas, and how you end up with the rates that you may see on different products and in different parts of the economy. Anything else to add on that, Mike?
No.
So the other piece on this, just on this headline, yes, rate cuts will be good for stocks. Not necessarily.
Also not always.
Will is doing an awful lot of work there. Sometimes they are, but if you go into a real recession, rate cuts are not usually great for stocks then. Stocks usually sell off, not during the entire recession, but at some point during them. And so rate cuts are not necessarily good for stocks if recession actually materializes. The Fed would be stimulating an economy that doesn't need it. This is the other piece that I think is questionable here. Hey, if you cut rates into an economy that doesn't need it, that's how you potentially end up with long-term rates moving up. If the recession doesn't develop and inflation comes out of those rate cuts, yeah, you could see the long end move up.
Right.
And by the way, it's exactly what happened last fall. The Fed cut interest rates. What happened to long-term rates? They went uppy, uppy, uppy.
Yep.
10-year Treasury moved up almost a full percentage point in a span of a few months, and then reversed a decent chunk of that, shortly thereafter. So none of this is black and white. None of it's cut and dry. And I think you just got to stay away from headlines like will or won't, and
have some humility.
Be open to maybe, Let's take a quick break here as we head towards the bottom of the hour. When we come back, we'll talk a little bit about what we see for, upcoming growth and inflation in 2026. We've also got Wall Street Watch right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled Leaving a Lasting Legacy. Mike, when it comes to naming beneficiaries on different accounts, what's the thought process that people should be starting with?
Well, first and foremost would be probably you want to do it. I know that seems so basic, but Chuck, I mean, how frequently do we run into this where forget about your investment accounts. Usually those are getting looked at. Your 401k, it's one of the first things you get asked. But I run into people every day that don't realize they can have beneficiary designations on bank accounts, for instance. And what an easy way to avoid frustration after you're gone.
Can you talk a little bit about how much time and effort that can save someone after a loved one passes away when it comes to being able to inherit assets quickly?
Anyone that's been through probate will know the answer to this, but these things can last a year, and it doesn't matter if it's a $5 million estate. Obviously, that's pretty complicated, but A $10,000 checking account could also need to go through probate, and it could take an equal amount of time depending on the complexities involved. And so there are a lot of benefits that are out there when it comes to just utilizing the tools that are made available to you, and beneficiaries is a big one.
Folks, the guide is titled Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001. Again, the guide is titled Leaving a Lasting Legacy. It discusses beneficiary designations and a whole lot more. And the way to request it again is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
On the final trading day of August, markets today are slightly selling off as Wall Street reacts to the core PCE index, the Fed's preferred measure of inflation, with no surprises. And mostly coming in line with expectations. Right now, the Dow is off by 0.4% or 190 points lower. S&P 500 is down 0.6% or 41 points lower, and the Nasdaq down by 1% or 224 points. Russell 2000 is down by about 0.5%. 10-year Treasury yield up 1 basis point at 4.226%. And crude oil is down 0.7%, trading just above $64 a barrel. According to the Wall Street Journal, Alibaba has created a new versatile chip to fill the void left by NVIDIA's restricted access to the Chinese market. Several other Chinese tech companies that are developing homegrown AI technology in order to work around U.S. restrictions to boost its AI technology. Alibaba shares are jumping 12%. Meanwhile, Dell Technologies hiked its annual outlook, driven by strong AI demand. However, the tech company offered softer guidance for the current quarter, sending Dell shares down by 10%. Elsewhere, buy now, pay later company Affirm seeing its stock leap 17% after it swung to a profit in the previous quarter, surpassing expectations. Ulta Beauty falling 4% despite the cosmetics retailer raising its full-year earnings and revenue forecasts after notching higher profit and sales in the latest quarter. Caterpillar revealed it now expects the net impact from tariffs to be as much as $1.8 billion this year, sending shares in the construction equipment maker down by 4%. And retailer Gap said it anticipates tariffs to cost between $150 to $175 million this fiscal year, higher than previously forecasted for the second quarter. Gap saw its same-store sales climb slightly, while revenue met estimates. Gap stock is up by 1%. I'm Tucker Silva, and that is Wall Street Watch.
Mike, we got a piece from the Bloomberg. Economists see slow U.S. growth, stubborn inflation well into 2026. And just to give some context to the data here, when we look at GDP growth for next year, economists are generally expecting that it's going to end up somewhere in the high ones, somewhere like right in the 1.7 to 2% range for next year. And inflation likely to remain, core PCE likely to remain north of 3% in the first couple quarters of the year before getting down to around 2.5% in the back half of the year. Is this worth the digital paper it's printed on?
I'm not sure what it tells you. I guess it's interesting asking how could they be wrong?
Yes. So this is where I think I like to think about these kinds of things. And specifically, hey, how could they be wrong to the upside on growth? And how could they be wrong to the downside on inflation? Like, what are the paths to things going more right is the interesting thing. Because to me, if things go more wrong, okay, you're going to get more Fed cuts. That to me is less interesting because you kind of know the playbook there. What I'm more interested in is, hey, what's the path to things being better than they expect? Where are the unexpected bright spots that we could see? So if you look at the things that can drive the U.S. economy, on the margin, what's the marginal activity that can drive it? Let's talk about housing.
Sure.
what's the path to 2026 being a stronger year for housing, typically in terms of two things, sales volume and additional construction?
I genuinely hesitate to think of a single one that could get us there.
It's tough to find one because pricing is so tough right now, and this is what we're seeing from companies. The place that actually could get us to a better spot on housing, in my opinion, is, at least in the short term, a Fed policy error where they're too dovish. And you still don't end up with, too much inflation necessarily in the short term. And so people are able to buy homes at cheaper rates. It generates a little more activity there. It still is probably a marginal impulse, but that's like one way that you potentially get there in the short term.
Sure.
Other than that, it's kind of hard to see housing being like this, something that draws the U.S. economy forward next year.
Agreed.
Data center construction, another big one that has been driving the U.S. economy this year. The case for it being, stronger than expected next year is that it's been stronger than expected this year.
Yeah.
There's been more construction this year.
Several years in a row.
CapEx has continued to ramp up faster than we can even measure it, basically.
Yeah.
And so there's your case for upside on that side of things. Tourism, not a huge driver of overall economic activity. I mean, let me rephrase. On the margin, tourism is just not a big enough industry to drive, a ton of activity there. But what you could see next year, hey, a lot of the foreign visitors who have put off a visit to the U.S. this year might say, hey, you know what? We're coming back next year. The World Cup's happening.
Dollar's weaker.
Dollar's weaker. Sure, going to the U.S. seems like a great thing to do. And so maybe you get some kind of marginal boost from that. Is it big enough to move the needle?
If you get all of them combined. If you get all of them combined.
Maybe, but has it been big enough to move the needle this year?
No.
Not really, in the other direction. So it's kind of okay, that could be something that's out there. Is it the return of non-business, non-AI CapEx growth? The One Big Beautiful Bill unlocked a ton of benefits for companies to invest in the United States. Do they spend the last half of this year planning and next year actually moving forward with a larger than expected CapEx because of these tax breaks they get?
Mm-hmm.
Maybe. I think you could see that. So I think the growth picture being stronger, there are some modest things around the edges, but it could happen. The inflation picture. What are the ways that we could see inflation be better than expected next year?
More conciliation on tariffs and recession. So if we're talking about positive ones, those are the two that I can think of would be tariff rates, which are, stuck for a number of countries right now. I'm thinking about India. I'm thinking about China. Could you see those come down?
Sure.
In which case, yeah, you could see inflation come in better than is currently expected.
The recession piece obviously could result in lower inflation, but obviously results in lower growth.
Yeah.
Which, doesn't really help you on that side of the equation. But are we just, again, I'm hashing this out in real time, just my own thought process. Are we too anchored to the idea that this is where 2026 has to be? Are we too resistant to the idea that it could be different?
I'm not sure I understand what you mean. Are you saying that you think these gains are the status quo?
No, so what I'm saying is we're basically saying, hey, it's really hard for us to see things being different from what's being projected next year. Are we too anchored to those projections to see things that might be obvious to us? As another
usually are.
The data center construction piece. The other side that we have not dealt with properly in the U.S., and we've talked about a lot, we're not building enough power generation infrastructure.
Right. Does it all fall apart because there's not enough electricity to power it?
I was going to go the opposite direction. Do we finally decide next year, heading into a midterm election year, hey, we got to figure out a way to produce more energy here. Not oil, but hey, we got to figure out how to build more power plants here next year and expedite the approval process. And is that, an unexpected positive thing that we see for economic growth?
Yeah.
There are things off the board that I think we need to consider, and that's one of them that, yeah, it's kind of a long shot, but it also makes sense when you think about it logically in terms of the issues that we might face next year.
I mean, I feel as though the end-all be-all, right? If you're talking about, I'm not sure what it does to economic growth because I'm just not sure what it does to the labor force and consumer, but the end-all be-all would be the productivity gains that have been promised now for the last 5 years from artificial intelligence.
Now we're getting somewhere fun. Robots, man. What if 2020? I'm serious. I know I said it kind of, tongue in cheek, but it's only kind of because honestly, I think this is coming soon. What if 2026 is the year of the robots, the same way that 2023 was the year of the large language models?
Could be.
These are just things that I like to consider as far as, hey, economists have their projections, and I understand that, and quite honestly, they've thought about this stuff way more than I have. Like, they got actual models for economic growth. I have, toy plane models sitting on my shelf.
Yes.
Which are fine. So I think ultimately, I just try to think of, hey, how can we see something that's different from what's expected? Because that's ultimately where you make money in markets. It's by seeing something that's different from what's expected. In 2022, it was, hey, the Fed's going to have to hike 5% because inflation's really hot when the market was pricing in 1% of hikes.
Right.
In the second half of 2023, it was, no, there's not going to be a recession when everyone thought we were heading towards one. Same with the second half of last year. So as we head into next year, it's, okay, where's the thing that could be different from what everyone's pricing in right now? And I don't know that it's any of these, but it's just the stuff that crosses my mind. Let's take a quick break. When we return, talk about this piece from the Wall Street Journal about consumer staples pricing and how some of those things seem like they might have a little bit bigger price tag in the coming months.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Mike, we got a piece in the Wall Street Journal. Higher prices are coming for household staples. Is this tariffs or something else?
Why? Yeah, so I think it's a little bit of both, but I think you have a combination of factors here for staples companies. One, yeah, a lot of the stuff that we buy on a day-to-day basis does come from China. Go to your hardware store, go to many of those places, and it is heavily imported from China, which is facing some seriously higher tariff rates. On the food side of things, I guess I'm having a tougher time making the connection other than, yeah, look, there are tariffs even on some food items, on the items that you use to package the food, and at the same time, a lot of those food processing companies are probably experiencing a pretty significant labor shortage. Go take a look at farms across the country and how outspoken they have been. Meat processing plants, things along those lines, relied heavily on either undocumented labor or folks that are in the country attached to folks that are undocumented, and there has been a significant drop in those people that are here and the new ones coming over the border. Would you explain it in any other way on the food side of things?
No, I think it's that. I mean, look, there's some food that you just can't produce in the United States. Bananas. You don't have the environment to produce large quantities of bananas in the United States. Coffee. You can't produce coffee in the United States consistently with the scale that you need. So, yeah, I mean, there's some stuff that is related to tariffs. There's some stuff that I think is related to the labor that happens on U.S. farms. And the thing that we're seeing is this is a pretty consistent, and there's some stuff that's also just related to, other things that are going on as well. I mean, it's not bird flu this year, but have you guys been paying attention to what's going on with beef prices?
Yeah.
I have. I'm a big beef guy myself. And those prices are moving in one direction, and that direction is up, and it's because of some concerns about different viruses and things there and stuff like that is pushing beef prices up, and as a result, I'm paying more for steaks, which is not ideal in my situation. But I think ultimately you look at this, and companies are now also trying to manage, hey, we've worked through some of the pre-tariff inventory. What do we have to do on this? And so I think it's a convergence of a bunch of different factors, tariffs of which are one, labor force is another, and then random one-offs that are pushing, prices up on some staples and stuff.
Yeah, I don't want to be alarmist. It doesn't seem as though prices are going back towards very high levels of inflation, but also really tough to envision any sort of, staple prices moderating to no inflation over the course of the next couple of years, I guess is where I would go with it. Folks, want to talk to you about the guide this month from the Armstrong Advisory Group. Why? Because it is the last day we'll be broadcasting the financial exchange of the month, so your last opportunity to get our brand new guide on leaving a lasting legacy. And this is all about a financial planner's guide to that difficult question of different stages of life and what it actually means. Now, I think, Chuck, when we're most of the time talking with clients, the legacy that we're talking about is just making sure that your spouse is protected, right? It's hey, how do I make sure if I pass away and my Social Security goes away that my spouse is able to continue to live comfortably and ultimately not have to worry about where the next paycheck's going to come from. And so a lot of the estate planning and legacy guiding has to do with that. But then you do have another stage of life that a lot of people find themselves in when it comes to how to best leave assets to children, grandchildren, and others. And when it comes to that stage, this guide addresses several different tools and how they might affect you from a tax perspective when it comes to using them. So whether that's gifting out to different family members, whether that's using different tools like 529s or trusts, what are the benefits to using one versus the other, especially now that a lot of the rules are once again changing with the Big Beautiful Bill Act? Like I mentioned, it is your last chance to get a copy of this guide. It is our August guide on leaving a lasting legacy. You can get it by calling the Armstrong Advisory Group at 800-393-4001. Again, last opportunity to get a brand new copy of our new guide, Leaving a Lasting Legacy. You can get it by going to armstrongadvisory.com. or calling us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I want to talk about happy hour.
Me too, Chuck.
Good. So, big thing. Mike and I, our show, we're based out of Massachusetts, which does not allow for happy hours for about 40 years now. And the big thing is a lot of restaurants and bars are pushing for Massachusetts to change the rules regarding happy hour. The reason being, basically people aren't hanging out after work, and they want more customers. And the argument they make is, hey, this will help us to get, more people coming in between like that 4 and 6 o'clock hour to, get us a little bit more business. And there's more public transit available now. You have things like Uber and Lyft, so people won't be drunk driving as much. Your thoughts, Mike?
I'm a general deregulation person, so I'm totally fine with this. The other piece of this that I was trying to recall, do you guys remember, I think it was last year, the city of Boston trialed a past 2 a.m. neighborhood that was going to be open for bars and restaurants after that 2 a.m. I don't remember anything coming of that trial run that they tested out, which probably means that they're not going to continue it. But this one just seems to me, like many of our alcohol rules do across Massachusetts, seems just kind of arbitrary that bars aren't allowed to offer this sort of thing. And, yeah, I would be in favor of anything that the restaurants need in order to...
And look, if you want to balance some of these things... Okay, allow for happy hours, but ramp up your DUI penalties.
Sure.
There's ways to solve this. But, yeah, let the restaurants sell what they want, when they want, for how much they want.
Agreed.
Quick break here, hour 2, in just a little bit.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking things off here, it's Chuck, Mike, and Tucker with you. And this morning we had personal consumption expenditure inflation data that came out at 8:30 a.m. Eastern. It showed on the headline reading 0.2% month over month and 2.6% year over year inflation. And for the core PCE data, we saw 0.3% month over month and 2.9% year over year. All those numbers basically in line with expectations. The core number towards the higher end of expectations, but still nothing unexpected there. Despite that, you do have stocks selling off today, with the Dow Jones Industrial Average holding up the best out of the bunch, down 174 points, about 1/3%. S&P 500 down 47 points, 0.75%, and the NASDAQ is down 261 points, or about 1.25% right now, as this is a tech-driven sell-off that's happening. Modest sell-off happening in bonds as well on the long end of the curve. Not too much, but the 10-year Treasury now up 3 basis points to 4.237%. So a little bit of money exiting bonds. It's unclear to me if this is, related to this morning or just end of month rebalancing and this and that. Again, one day does not make a trend, so let's not read too much into any of this here. We've got oil down 54 cents a barrel to 64.06. The AAA national average for gas prices also sliding almost a cent to 3.20 1/10 cent as that refinery outage in the Midwest is starting to abate and get production back up to speed, and so prices falling there. Just as an example, in Michigan, prices down 2.7 cents overnight as supply is coming back online for the region. Finally, gold up $27.50 an ounce, back above $3,500 for the first time in a little while. And so gold making some runs towards new highs as it reacts to the inflation data that we saw this morning as well. Remember, when we look at the all-time high on gold, we got just above this level here a couple months back. But looking to see if we can get to all new all-time highs on gold, which, I don't know, I think would be kind of fun. Yahoo! Anything else to add, Mike, that you're seeing out there?
Gold! That's all I had to add, actually.
Okay, thank you, Mike. I appreciate that. New York Times with the piece, How the Future of the Fed Came to Rest on Lisa Cook. Mike, what's the piece layout here?
That this is all going to test out the Fed's independence. For those who haven't read much about it, which would be tough if you listen to the show and read any economic pieces. Lisa Cook, one of the voting members of the Federal Reserve, has been fired by the president for alleged lies on her mortgage application, or I guess alleged
mortgage fraud.
Yeah, alleged mortgage fraud. Let's put it that way. The fraud itself was alleged to have taken place, I think, in 2021 or 2022. Mm-hmm. In any case, what is testing the independence is whether or not the president, even in a case of, alleged fraud, has the right to terminate someone for cause. Now, this is going to play its way out in the courts. Typically, most experts that I've heard of, when they talk about firing for cause in a rule like this, it's more about gross negligence while on the job at the Federal Reserve, rather than something that occurred not really related to the job. But all of that's going to be put to the test. And so that's how that future kind of came to fall on Lisa Cook's shoulders is, okay, can something that I did 5 years in the past or a decade in the past be used as cause to terminate me in the role as a governor of the Federal Reserve? It's never been tested before, and it's about to be.
Yeah, and so, look, there's a hearing that's going on right now as we speak with regards to Cook is looking for I can't remember if it's a stay or a temporary restraining order to be put in place on the firing while this works its way through the court system. But there's a pretty good chance, based on everything I've read, this ends up making its way to the Supreme Court probably in the next 2 to 6 months, depending on the exact timeline. And so, look, I think ultimately where, what we know and what we don't know, there's, it's just kind of messy right now. We haven't even seen any of the actual documents.
Right.
So, we don't know what's actually on them. So she may or may not have actually committed fraud to try to lower a second mortgage rate. That's possible. We don't know right now.
Right.
If she did, does that rise to the level of being able to fire her for cause from the Fed?
Also don't know.
Very much unknown. If you are one of the Fed governors, even if it doesn't rise to the level of being able to be fired for cause, is it still something that should preclude you from having that role?
I guess that's an interesting question, right? If this had been brought up at a Senate confirmation hearing, would it have?
Is it disqualifying?
Right? Is it disqualifying? I don't.
You know,
That's not the same thing, right? You know, being disqualified by the Senate confirmation versus being terminated are two different things. But I genuinely don't know the answer to that question, and I wonder if anyone's looked like, okay, did somebody that's ever been appointed to the Fed, were they ever convicted of some sort of financial crime? I would doubt that was the case, but anything's possible.
So there's a lot of questions that are in play here, and obviously this is going to be a big issue that people follow over the next, probably a couple quarters. Again, I don't think we get a final resolution on this probably until early in 26, unless Cook decides, hey, I'm just going to step down because this is just too much of a distraction. But given, kind of what she's doing to this point in terms of contesting it, I don't think she'd just suddenly wake up tomorrow and be like, okay, I'm done.
Yeah, it seems to me that she wants this to be a test case that goes to the Supreme Court.
It sure does. So we're going to have to watch to see how this plays out. But, again, I don't think we know anything definitively right now about exactly, what has gone on. There's going to be a whole, thing that has to play out here as far as, the justice system. And we'll see where we are at the back end of that. I think that's basically where I land right now.
I feel like additional.
Here.
I feel like some context about the Fed's independence here is a little bit helpful. I don't want to go too deep into it, but the Supreme Court itself, in a very recent ruling, and I don't remember who it was in regard to, is another firing of an agency head, basically confirmed the president's power to remove that individual, while also specifically mentioning the Federal Reserve as one agency where they didn't have such powers.
Yeah, so this was I pulled it just because I wanted to find where it was, and so it was related to President Trump trying to remove Gwen Wilcox from the NLRB and Kathy Harris from the MSPB.
Yep.
And pretty much they argued that their firings were against federal law because they can only be removed for cause, and the Supreme Court said no, you're not, this is not the case for you, but, and this is the big but that, that basically is the whole crux of why we're here right now, but they pretty much said, look, this is not related to the Fed in this ruling. Specifically, the quote here, the Fed is a, quote, uniquely structured quasi-private entity that follows in the distinct historical tradition of the first and second banks of the United States. So the Supreme Court literally, and I say that, with its actual meaning, not the one that's used on The Bachelor or The Bachelorette, the Supreme Court literally said, yes, the president can fire members of these other independent boards, but you cannot touch the Fed.
Right. And it was not some other Supreme Court. It was this Supreme Court.
It was these 9 members.
These 9 members saying that. So, again, I have no clue where this goes.
Markets are betting that it doesn't go anywhere, is my read on this. Because otherwise you would have had more movement in markets this week. And this was just a really boring week until today, quite honestly. And today's not even over, so we might even end up closing flat by the time it's all said and done today.
Could be.
Take a quick break here. When we return, let's do a little bit of trivia, and then are we going to talk Alibaba and AI?
Sure.
That sounds great. We'll do that right after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. If you're thinking about estate planning, trusts can be a powerful tool, but which one's right for you? Revocable, irrevocable, and many other options exist, each with different rules and tax implications. Call Cushing & Dolan at 866-848-5699 and get their free guide demystifying the top 7 estate planning trusts. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Artificial intelligence is changing the way companies invest and how markets move. Add to that global trends like international outperformance, a weakening dollar, and shifting bond yields, and you've got a complex landscape for investors. This is Mike Armstrong from the Armstrong Advisory Group, and we're hosting 2 financial seminars this fall to help you understand what it all means. Join us at Margaritaville Resort, Cape Cod on October 9th, or at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your seat. We'll talk about how diversification and preparation may help you navigate uncertainty so your plan is ready. Don't miss this chance to get a clearer picture of your financial future. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Well, plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com. Time for trivia here on the Financial Exchange, and it's our final day of World War II trivia here as the month of August comes to a close. So here we go. As soon as news broke of Japan's attack on Pearl Harbor, America's favorite future game show host dropped out of college and enlisted in the Navy and trained as a fighter pilot. After his stint in the Navy, this man started hosting his first game show in 1956, which began a run of game show hosting that would last 51 years. So, trivia question today. Which famous game show host was a naval fighter pilot in World War II? Once again, which famous game show host was a naval fighter pilot in World War II? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Wall Street Journal exclusive. Alibaba creates AI chip to help China fill NVIDIA void. And basically the run-through of this, and look, this is definitely one of those where you have to ask the question, like, why am I reading this now?
Sure.
The read-through on this is that Alibaba and other Chinese electronics companies, Alibaba's not even a Chinese electronics company, really. You know, I mean, they have like a cloud computing business, but I don't think they've really done a ton in chip design before this.
Nope.
Basically, these companies are trying to come up with, alternatives to NVIDIA chips. And I'm just going to read one sentence that I think is really interesting to me in here. And this is the one. In July, Shanghai-based Meta X, so not U.S. Meta, but this is Meta X. I know it's confusing. Rolled out a new chip that it said could serve as a replacement for the H20, which is NVIDIA's chip that they currently have the licenses to sell in China. The chip has bigger memory than the H20, boosting its power for AI tasks, although it consumes more electricity. Meta X said Wednesday that they're preparing for mass production of the chip. Mike, what word in that paragraph do I think is the most important?
Electricity?
Yeah. You want to know why? You want to know the bottleneck that China doesn't have?
Power.
You can build power plants in China all day. If I went to the Chinese government right now and said, hey, I've got a plan, here's how I'm going to do it, love the work you guys have done, what can you do for me?
They would dam a river for you tomorrow.
They would put a nuclear power plant on my head and say, go and do what you want to do. No problem. Have at it. You got it.
Yeah, far fewer electricity constraints than the United States has. That's true.
So here's where I'm going with this. China's chips might not. Again, I have no idea. I'm not an electrical engineer. I have no idea the details of any of this. But let's assume for the moment that this article is correct and that China's chips are not as strong as NVIDIA's are at AI tasks. China could be making the bet, you know what? You're right. From a quality perspective, we can't compete. But you know where we can compete? It's the same place we compete everywhere else. Quantity. We're going to just make a boatload of these. We got plenty of power plants that we can build in order to power them, even if they're less efficient. And you better believe that we're going to make it up with building 5 billion of these things instead of, the 2 billion NVIDIA chips that we want to buy or whatever it is.
Yeah, it's easy to buy. It's easy to believe that could be the route that they might end up taking. And the question that you and I can't possibly answer is, to what degree do you need to produce these things to compete with something as efficient as NVIDIA's Blackwell or the next generation chip that they produce? I have no idea on that front. It's unanswerable.
It probably doesn't matter, though. I mean, if there's one thing that China is known for, if there's one thing I think China should be known for, it is consistent overproduction of goods relative to the market demand for them.
Yeah.
So if there's one thing that they're going to be really good at, it's producing way too many of these things. They might not be great, but hey, just throw a bunch of them at the problem and see what happens. And oh, by the way, the other piece that is interesting to me then is, Mike, what's the problem that we see worldwide when it comes to Chinese overproduction of goods?
It crashes every other domestic producer of them.
Yes, dumping.
Yeah.
It's okay, great, now we're going to export this overproduction everywhere else.
Mm-hmm. Problem for NVIDIA if that occurs.
Right. I mean, I'm just
AMD and
I'm just thinking through this and saying, look, there's really good reasons why Europe might say, hey, we're not going to buy these Chinese chips. Remember the whole thing with Huawei and 5G networks a few years back.
Yep.
But think about some of those marginal buyers that the Trump administration was trying to secure earlier this year. Think about Saudi Arabia.
Yeah.
Think about the UAE. Think about other Gulf states and things like that. Hey, if China comes to them and says, hey, number one, like we're bigger buyers of your oil now because the U.S. is producing so much. Hey, if you want us to keep buying your oil in these quantities, how about you buy our chips instead of the American ones? I don't know. I don't know that those conversations are happening yet.
But you can be sure that this is most certainly the conversation that the CEO of NVIDIA, Jensen Huang, is bringing to the president and bringing to his advisors of, if you don't let us sell, then this is what you get instead.
Correct.
And it's a compelling argument. I'm not sure I get there. It's a compelling argument for why it would sink NVIDIA's business. I don't think it gets to the point where, we should just sell the Chinese our Blackwell, latest and greatest chips. But it is a compelling argument as to why it could be a threat to their business.
Even there, when we say threat to their business, it's not like NVIDIA goes out of business because of this.
Sure.
It's they just lose that marginal buyer that isn't Mag 7 right now, potentially. Yep. So I think this is interesting, and I got to admit, my spidey sense is kind of tingling on this right now.
Well, because it's not just a report out of China that they can make these chips. What's happening concurrently with it is NVIDIA can't sell their chips to China. Right? We're getting confirmation.
Well, NVIDIA can, but China won't buy them.
That's my point, is that they're not selling. And so if this were just a solo report out of China, I'd say, okay, well, maybe not. But the fact that NVIDIA is not having any luck selling their H20 chips to Chinese buyers indicates that maybe there is something here in terms of a competitive product from a domestic maker of the semiconductors.
Yeah, so this is interesting to me. Again, I feel like there's something going on here that has my antenna up. Quick break here. We've got the trivia answer. We've got Wall Street Watch when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Leaving a Lasting Legacy. Mike, one of the things that people have to navigate now is figuring out which accounts to leave to different beneficiaries. As an example, if someone has two children, one in a high tax bracket, one in a low tax bracket, how does that potentially impact who receives which assets?
Well, let's call it out. First and foremost, most commonly, people just divide equally. And there's nothing wrong with that. I get the fairness argument with all of this. But taking your example here, let's imagine we have one person with an average effective tax rate of 10% and another one with 25%. Obviously, there's going to be a massive difference in terms of what is left over with a traditional IRA, for example, for that person in the 25% bracket versus the 10. And so with the new rules over the last few years when it comes to requiring those accounts to be emptied over the course of 10 years in most cases, especially on the retirement account front, there's a lot of different stuff that can be looked at there. That doesn't even take into account things like non-retirement accounts, Chuck, right?
Sure.
So for those, you have a different set of rules that applies to those, generally pretty preferential tax treatment. And so you can be really intentional about how you leave the biggest legacy possible to your heirs as a whole.
Folks, the guide is titled Leaving a Lasting Legacy. The way to request it is by calling 800-393-4001. Again, the guide is called Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, on the final trading day of August, markets are in negative territory, seeing a pretty modest sell-off here as Wall Street reacts to the core PCE index, the Fed's preferred measure of inflation, with no surprises coming in line with expectations. Right now, the Dow is down by 0.4% or 186 points. S&P 500 now down 0.7% or 46 points. NASDAQ down over 1% lower or 243 points lower. Russell 2000 is down by 0.6%. 10-year Treasury yield up 3 basis points at 4.238%. And crude oil down about 1%, trading right around $64 a barrel. According to the Wall Street Journal, Alibaba has created a new versatile chip to fill the void left by NVIDIA's restricted access to the Chinese market. Alibaba shares are jumping 11% on that news. Meanwhile, Dell Technology hiked its annual outlook driven by strong AI demand. However, the tech company offered softer guidance for the current quarter, sending shares down by 10%. Sticking with tech, where Marvell Technologies is down by 15% after the AI chip maker's data center revenue fell short of estimates. The company also reported lackluster guidance for the current quarter. Elsewhere, buy now, pay later company Affirm is seeing its stock leap 12% after it swung to profit in the previous quarter, surpassing expectations. And Caterpillar revealed it now expects the net impact from tariffs to be as much as $1.8 billion this year, sending shares in the construction equipment maker down by 4%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the question, which famous game show host was a naval fighter pilot in World War II? That would be Bob Barker. And our winner today is Bob from Sebago Lake, Maine, taking home a Financial Exchange Show t-shirt. Congrats to Bob. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
We're joined now by Todd Lutzke from the law firm of Cushing & Dolan. Mr. Lutzke, how are you today?
I am never better, and you?
Doing well. Todd, there are a bunch of different types of trusts out there. How does someone actually pick the right one for their specific situation?
So really the only way you can do it is become educated about the different kinds of trusts that are out there, and the way to do that is perhaps sit with an estate planning attorney. If you don't, obviously there's a guide we're giving away that's going to be helpful in that, but I'll get to that in a minute. But you can only read so much about this stuff. Sometimes you just need that in-person, English version, layperson version of the explanation of how they work. But I can tell you a couple of things. It's driven probably primarily by the size of your estate. That will help. So certainly much larger estates are probably more in the revocable world, at least to begin with. And then if they need gifting, they would get into the gifting irrevocable trusts. I would say smaller estates are probably going to be able to stay just with the revocable trust world. And then, of course, age is another factor. I think you figure the older you are and the size of the estate might dictate, a little smaller estate, but over 65. Now I'm thinking about nursing homes and protecting it from the nursing home, and now I need, some kind of an irrevocable nursing home trust. And maybe lastly, when you're adding the value of your estate, don't forget about life insurance, because that is a tricky asset that can throw your estate into a much higher value than you think about, because it doesn't pay out till you die, so you tend to not count it. And that might need to go into an irrevocable life insurance trust. So many kinds out there.
Todd, when does someone need to review the planning they've already done to make sure that the tools they selected before are still the right ones for them today?
So excellent question. So one, of course, we think about age. Maybe I did my planning 15 years ago, 20 years ago, and I was, in my early 50s. Well, now I'm 70. Well, it not only has age changed because the time has gone by, so that might make me want to shift from a revocable trust to an irrevocable trust, but also assets, right? Maybe the assets have changed, maybe have grown significantly, which might need you to look at the documents you have and see if they still work. So, and of course, tax laws change. So I think it's all of those things, plus I think just time in general you should always just review. I'm thinking once every 10 years at a minimum. Depending on the size of your estate, if you're much larger estates, you probably want to think about it at least, large estates. I don't have a problem calling every December. It's year end. What's happening and what should we be thinking about? So, folks, estate planning requires some thought. It's a living, breathing idea, and the guide we're giving away this month, and it's the end of the month, is the top 7 estate planning trusts. So this, if nothing else, will help educate you as to what type of document might be right for you, what type of trust might be right for you. They explain how they work, from revocable to irrevocable to special needs trust to nominee realty trust. There's something in there for everyone. Help get yourself started with estate planning, or review, as Chuck said, and figure out what plan might be right for you now. The guide, Top 7 Estate Planning Trusts, 866-848-5699 or legalexchangeshow.com. One last time, 866-848-5699 or legalexchangeshow.com.
Todd, thanks for joining us today.
Always a pleasure.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, do you ever get the sense that Tucker, when he's, kind of looking through different articles, at 6 in.the morning,
explicitly chooses them to make us angry?
Comes across one and just, smiles and goes, "Ha, that'll show them."
I do. Is it the one from Market Watch?
Yep. It is.
Yeah.
It's titled, "Why the S&P 500 Could Be at Risk of a 10 to 20% Pullback If Ether Falls Behind Bitcoin Again." Mike, what the heck are we talking about here?
Even I was just like, what the hell is this crap?
I don't know. I'm also worried about the ratio of unicorns to shroot bucks right now and how that might impact markets. So.
Well, I've been told that when Mercury is in retrograde, and at the same time, if it's rainy, you need to go and buy paper.
So in spite of the title of the article, I decided to go through and read it. And
do you regret that decision?
I do. I was thoroughly disappointed. It basically claimed some trends since 2018, which is really useful.
Oh, we got 7 whole years of data. Wow.
Useful back data. Then called out a few exceptions where these rules did not apply, and then went on to explain zero logical reason why this happened in the past or would hold true in the future. So, with you, if you don't put it on your list for Festivus, then I'll make sure I do, Chuck.
Are we getting to the point where the internet's just bad? Because here's the thing, Michael.
Getting to the point.
No, yeah. I'm kind of like having this epiphany. I had this I was talking to someone about this yesterday in another respect, but the only reason that this is published is because it's so cheap to do so. Like if you had to go out and actually print this on paper and pay for those costs and go through the work of distributing it, you would just give up and be like, no, sorry, I'm not going to do it.
Not worth it.
It's not worth it. But
clickbait.
People always say, you're entitled to your opinion. And it's true, you are. But you aren't entitled to, have people agree with your opinion. And the problem is that the internet has made it so that we all think that everyone should agree with our opinion, when more often than not, most people, myself included, tend to be wrong a decent amount of the time.
Yeah.
And so I just don't think that the internet is good because of this.
Blanket statement. Internet bad now.
It's totally fine to have your opinions. You don't always need to share them.
Yeah. Yeah.
Some of them we can just keep to ourselves, and it's just fine. But that's just me. So, yeah, this is one of those. Again, if you read this and made an investment decision based on it,
good riddance.
I'm sorry. I just don't know how it's going to work out for you. Let's take a quick break. When we come back, we're going to be joined by Paul LaMonica from Barron's right after this.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're thinking about estate planning, trusts can be a powerful tool, but which one's right for you? Revocable, irrevocable, and many other options exist, each with different rules and tax implications. Call Cushing & Dolan at 866-848-5699 and get their free guide demystifying the top 7 estate planning trusts. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we're now joined by the one and only Paul LaMonica from Barron's, and we're talking about Salesforce today. Paul, how you doing?
I'm good, thanks. How are you guys doing?
Doing well. Salesforce stock has had a challenging year, year-to-date, down almost 25%. Even you take a look at, kind of its track record since being moved into the Dow, and it's done worse than the company it replaced, ExxonMobil. So what do we make of Salesforce and where they stand today and their prospects for the future?
Yeah, Salesforce is going to be reporting earnings next week. Growth may be a little sluggish, looking at, below 10% year over year increase on sales and earnings, which is obviously not spectacular. But I think when you look at this stock and how it's been beaten up so much, it's now trading at a valuation PE in the low 20s, so it's around the market multiple, usually trades at a big premium. It's probably not going to get back to those levels anytime soon as long as growth doesn't pick up, but it's arguably just way oversold and undervalued at this point, given that it's at about a 10-year low on its valuation. And I think the big issue is that there are a lot of concerns about what AI is going to do to enterprise software offerings. Does it make it a little bit less of a compelling value for big corporations to be spending so much money on these multi-year contracts? But I think that investors aren't giving the company enough credit for its own agentic AI software offerings that, if you turn on the TV, anyone that still does that in 2025, you can't miss all those Matthew McConaughey, Woody Harrelson Salesforce commercials. And as absurd as they might be, that they are spending a lot of money to promote their, AI offerings, and you got to think that's going to gain some traction.
So this is what I was going to ask. How can all of these companies that currently don't have inroads with, enterprises in these areas that are developing AI, how are they getting all of the credit for future revenue that hasn't yet happened when Salesforce is getting no credit for the same thing?
Yeah, no, it's a great question. I mean, I think that there is clearly a lot of excitement, and you're seeing that with Microsoft and Alphabet, having stronger years than Salesforce. I think there is this recognition, it's not just the chat GBTs of the world, the startups. I think that there is this notion that Gemini on Alphabet and Copilot with Microsoft, that they have a bit of a head start over companies like Salesforce. But, Salesforce is a company that is entrenched in so many big businesses, not just with their core CRM platform, but also with Slack, with some of the other acquisitions that they've been making over the past couple of years. So I think investors are probably underestimating the ability of Mark Benioff to come up with a legitimate AI strategy that will eventually yield, more revenue and profit growth. And as I point out at the end of the piece, there are some activists involved in this stock as well. So worst case scenario, you figure that there's more pressure to try and push Salesforce to make changes. And they actually did that a couple of years ago. And it's one of the reasons why after, lagging for a bit, the stock, doubled in 2023, I believe.
Yeah, isn't one of the other pieces with Salesforce, like they're not the same company they were in the 2010s where, they were consistently, struggling with free cash flow, their margins were bad, and it was just grow at all costs. They're a really profitable company right now that is, making a boatload of profit, and to this point, that hasn't really changed.
No, I mean, it is clearly a more mature company now. They have done numerous acquisitions, as you pointed out. I mean, they're one of the worst stocks in the Dow. Let's let that sink in. Salesforce is in the Dow. This is not by any means a company that is an underdog anymore.
No,
I think there was that period of time where you felt that they were struggling to compete with Microsoft and Oracle and SAP. I think the issue is probably the narrative has changed a little bit. So it's not so much that they're lagging behind legacy software companies. It's that, there are just concerns about, what the future of software looks like in an AI world. So, that might be, more of a fundamental challenge for them going forward.
Very good. Paul, appreciate you joining us today. I hope you have a great Labor Day weekend, and we'll catch up with you in September.
Yep. Thanks a lot. Same to you guys. Have a good long weekend.
That is Paul LaMonica from Barron's talking about Salesforce. Mike, do you mind if I go into this Financial Times piece on Meta's AI division? Just because, gosh, some of the quotes that came out of this are just really, really good in terms of it basically talks about, hey, Meta's been hiring a bunch of these AI scientists, and they're not getting along, and they're just leaving.
Of
course
basically they're not. They are all the smartest person in the room.
Yes.
This is very predictable.
So, things that have happened here. Adding to the tumult, a handful of new AI staff have already decided to leave after brief tenures, according to people familiar with the matter. This includes Ethan Knight, a machine learning scientist who joined the company weeks ago. Another, Avi Verma, a former OpenAI researcher, went through Meta's onboarding process but never showed up for his first day. You got a 9-figure deal for Meta and you're not showing up for your first day? Man, things must not be great. Other things that we have here, this is just a really kind of wild one. In a tweet on X on Wednesday, Rishab Agarwal, a research scientist who started at Meta in April, announced his departure. He said that while Zuckerberg and Wang's pitch was incredibly compelling, he, quote, felt the pull to take on a different kind of risk without giving more detail. Is he going dirt biking with Evel Knievel?
I have no idea whether this is a Meta thing or a just asininely overconfident employee thing, but in either case, it's kind of humorous.
I think
the only thing I can do is laugh about it.
I think it's a Meta thing, because here's how their own corporate PR responded to questions on this. We appreciate that there's outsized interest in seemingly every minute detail of our AI efforts, no matter how inconsequential or mundane, but we're just focused on doing the work to deliver personal superintelligence. Okay.
Yeah.
Okay.
Yeah.
And then Meta also said they were talking about how Zuckerberg is too, micromanaging this division also. Meta said this allegation was, quote, manufactured tension without basis in fact that's clearly being pushed by dramatic navel-gazing busybodies.
Ooh.
I got to tell you, you better
Shots
hope
fired.
you better hope that this stuff pays off for you. Otherwise, you're going to look like just the most overconfident, like, bunch of not nice people.
What else is
in
new?
a while? Zuck is returning to his roots. He's returning to his roots. All is saved. Let's take a quick break for the entire long weekend. Hope you all listening have a great Labor Day weekend. And when we see you next time, it'll be September. We'll see you then.